You know when you drive on a brand new toll road or walk through a shiny new airport terminal? Ever wonder who actually built it and who's running the show? Well, a lot of the time, it's not just the government. It's a massive, decades-long partnership with a private company. And that's where this thing called SIC 29 comes in. It's basically the accounting rulebook that pulls back the curtain on these huge, and I mean huge, public-private projects.
So here's our game plan for this explainer. First, we'll cover what these partnerships are all about. Then we'll dive into a big issue they create, the transparency problem. After that, we'll walk through the solution, the disclosure checklist from SIC 29, get into the nitty-gritty of rights and obligations, and finally, we'll tie it all together and talk about why this stuff actually matters.
All right, let's kick things off with our first section, public projects, private partners. So what on earth is a service concession arrangement? It's a bit of a mouthful, but it's a term you're going to want to know.
At its heart, it's pretty simple. A government, which we'll call the grantor, makes a deal with a private company, the operator, to handle some kind of big public service. Think about it like this. Your city desperately needs a new bridge, right? But maybe they don't have the cash up front. So they hire a construction company to build it, let them operate the tolls for, say, 30 years to make their money back, and then, at the end of the deal, the bridge gets handed over to the city. That whole shebang, that's a service concession arrangement.
And let's be super clear here. This distinction is really important. We're talking about the big stuff, major public infrastructure, motorways, bridges, airports, things we all use. This isn't about a company outsourcing its internal IT department or hiring someone to run the employee cafeteria. The absolute key difference is that the operator is providing a service directly to the public on the government's behalf.
Okay, so that leads us to a pretty big issue, the transparency problem. When you've got these incredibly complex, multi-billion-dollar deals that are set to last for decades, it brings up a huge question. What do these companies and governments actually have to tell us, the public and the investors? And this quote, which comes straight from the official standard, just nails it. The whole issue was, what information really needs to be out in the open, right there in the financial statements? That, right there, is the fundamental question that SIC 29 was created to answer.
Now you might be thinking, hang on, don't we already have accounting rules for buying assets or leasing buildings? And you're absolutely right, we do. But these service concession arrangements are a totally different beast. They're way more complicated than a simple purchase or lease, and the existing rules just didn't cover everything. It created this big gap in financial reporting that really needed to be filled.
So how do you solve a problem like that? Well, 629's solution was to lay out a very clear, mandatory disclosure checklist. It basically said, okay, folks, here is exactly what you need to tell everyone from now on.
So what's on this list? Well, at a high level, it's the basics. You need a description of the deal, all the important terms that could affect the money, like how long the deal lasts or when toll prices can change, any changes that happen during the year, and, this one is crucial, how you classified the whole thing in your accounting. It's pretty much the who, what, when, and how of the deal.
But it definitely doesn't stop at the basics. Next, we have to get into the real nitty-gritty, the rights and obligations. This is where the rubber meets the road, where we see the specific promises that define the entire relationship.
And believe me, the standard demands total clarity here. It asks all the important questions. What exactly can the company use? What services are they obligated to provide? What are they on the hook to build? What happens at the very end of the deal? Who gets the assets? What are the options to renew the contract or, to end it early? It even covers things like who has to pay for major repairs. It forces everyone to put all their cards on the table.
The standard also follows the money, and in a very specific way. It forces the private company, the operator, to report the revenue and profit it makes just from the construction part of the deal. This is so key because it prevents those profits from getting hidden or smoothed out over the decades of operation. It gives investors a much, much clearer picture of profitability right from the start.
And, the standard is actually pretty practical. It's not just about creating more paperwork. A big company that operates, say, a dozen similar toll roads all over the country doesn't need to create a massive separate report for every single one. They can group them together by class, like toll collections. It just makes the financial statements a whole lot more concise and, frankly, easier to understand.
Okay, so we've been pretty deep in the weeds of accounting rules. Let's zoom out for a second and ask the big question. Why does any of this actually matter? What's the real-world impact of all this on you, on our economy, on our society?
Well, first, it's important to see that SIC 29 isn't some old, dusty rule that's been forgotten. As you can see from this timeline, it started back in 2001, but it's evolved. The title was updated in 2006, And it was amended as recently as 2016 to make sure it worked with new standards. This thing is a living document that adapts to stay relevant.
So, let's bring it all home. What's the end game here? Ultimately, it all boils down to one word: transparency. For investors, it gives them the clear, consistent info they need to actually weigh the risks and rewards of these massive projects. And for the rest of us, for the public, it gives us a window into the deals that build our communities. And that, in turn, helps build accountability and public trust.
And that leaves us with a really big question to chew on. As we see more and more of our essential infrastructure, our roads, our water systems, our airports, being built and run this way, you have to ask yourself, when private companies are running public services, is just disclosing the information the ultimate form of accountability? Or is there more to the story?